Okay, so as I was saying, right, this I came to my bigger time frame. Let's say I'm looking at this market and this is my daily time frame. All I need to do is look at this recent leg of price here. I look at this recent leg of price here and try to identify the general direction of the market. Here you can already see that okay, we are in a range, right? We are in a range here where this market is going up. Now, anything that is happening within this range is an internal pullback. Now, right, if I look at this market here, if I look at this range here, and I already identify that, okay, this is my demand zone or this is my extreme zone that I'm looking to enter of this market, right? I've already identified that, and I know that, okay, this is this zone. If this market comes to this zone, I'm not looking to longer to be expecting it to continue to the downside. So now from this zone, I'll be expecting a reversal. But now, since this is my bigger time frame, for the if I happen to just wait for the market to ever come back here for me to buy and continue to the upside, this might take months or even weeks, right? So now what do I do now? I've already identified this range and I've already identified that okay, the market is playing in internal range and it's trading downward. So now I can switch down to my medium time frame. On my medium time frame now, what I'll be looking to do now is mark out this structure on a medium time frame. I mark out all these structures on my medium time frame. Once I've identified all of these structures on my medium time frame, then I can look now to take a sell. Now, the reason why I'm taking this sell is because, first of all, the market is pushing down here. For the market to, this market will keep creating a downtrend, right? So, for the market to actually get right down here, we need, we can have a sell here, which we can sell and target this zone down here. So, basically, now this is our internal structure here. This is our internal structure. Now we can also wait for the extreme. Once the market has mitigated, now we can look for our fractal structure to buy. But for this moment, what we expect from here is for the market maybe to come up to this zone, give us fractal structure here for us to sell and target this demand zone here. Once this demand zone is mitigated, we can either wait out here and see how this market reacts to this demand zone, right? You can either wait out here and see how this market reacts to this demand zone. But if in case the market starts happening to start trending up, then we can generally look for our entry to continue this market to the upside. The people that raised it.
Yes, we can see your screen. We can
Okay.
see your screen.
Okay, let's continue.
All right, boss.
So, as I was saying, right, on your daily time frame or on your bigger time frame, the main thing you are identifying is you are just identifying your zones. You are not identifying zones which you wish to trade off of immediately. That job is for the internal structure. That job is for the medium time frame, right? That job is for the medium time frame. When you have already built up your narrative on a daily time frame where the market might likely be targeting, or on the weekly time frame, it depends the type of trader that you are. What you want to do now is switch down to the smaller to a medium time frame where you would actually do your marking of structures and your marking of pure eyes. Now, once you have done that, right, what you want to do if the market approaches those pure eyes is look for an entry. You look for an entry in your entry time frame. So on a bigger time frame, you don't stress too much, you just identify the narrative of the market. On a smaller time frame now, it's where you start building up that your market bias. You start building up that market bias on where you are likely to see the market go to, and then you go to the extreme to the smallest time frame, which is your entry time frame, to look for entries. Now, right, we don't just talk and we don't I will not just talk and don't show you examples. I will need to show you examples for you to actually on this time frame. I will not come here to start marking all of these breakout structures. Maybe I might have done that before to start marking these breakout structures because I'm not a swing trader, right? I will not start marking all of this. I can still mark this, but I will not want to mark all of these. The first thing I want to do here is identify the immediate direction of the market. Now, if you look at this, right, if I zoom in and I concentrate on this recent move here, that is what I would like to concentrate on. What I'm going to see is I had this low here and I have this high. So everything that is happening within this low. And if I look a little bit before this low, I can see that I had a break of structure here. So this market was pushing to the upside. Now, what is this market currently doing within this low, right? The market currently is still within this low, and this is our internal structure. So if I look within this low, I can identify some few zones which I might be interested in taking a trade in the future. These zones. Also, inside this range, I can also see this pool of liquidity here. This is a pool of liquidity here. So I've already gathered that okay, this market at least will drop down to this zone before it goes to create the next break of structure. That one is already identified. So the next thing I want to do is drop down to the 4 hours time frame and properly mark out my structure from the 4 hours time frame. And if I drop down to the 4 hours time frame here, which is my medium time frame, right? And I start marking out my structure now. Right down from this zone here, we can see that this is where initially we had our first break of structure. This is where we had our last break of structure to the downside. So as I was saying, right, this was where we had our last break of structure to the downside. And after this break of structure, you can pretty much see that this market gave us a change of characters at this point. And since ever this market gave us a change of characters, it was trending upward, right? That was our next break of structure, and so on and so on. So this market currently trending downward here. This market is currently trending downward here. But somewhere along the line, we had a change of characters, right? This is our change of characters at this point here. So this shown us that okay, on a daily time frame, we saw that okay, this was the high, but now on this time frame now, which is our our medium time frame, we start to see now that this market is now starting to show signs of a reversal. Reversal to where? Reversal to come down to that zone that we were looking for on the daily time frame. That this might be our demand zone that we can look for buys in. So now this market currently is reversing. So we have an idea that this market might likely be coming down to this zone or even to a zone below here. This is internal structure of the daily time frame. This structure we are marking here, you need to understand that this is the internal structure of the daily time frame bias. So now we looking at this, right? Let me label this properly. I don't want to stress how much time marking out majority of the inducement and all the like. That will be for another class maybe. But this one I just want to show you the pure structure. So now we have this break of structure here. The next thing we identify that this market has gone ahead to make a lower low, lower high, and a lower low. So this shows that this market has already started to trend downwards. This market has already started to trend downward. And if we happen to look at this critically, right, you see that after this break of structure here, this market went ahead to mitigate a supply zone here. After this market mitigated this supply zone here, it dropped, right, giving us this break of structure. Obviously, what we want to see in the market now is for the next move to come up to this zone and mitigate this supply zone. So you can see that okay, the the daily time frame has already given us the bias of the market. This 4 hours is already showing us something more as concerning this market. So this is the zone that we want this market to come up to mitigate, then drop. So now, looking at this zone here, we can see that this market is also here. Now, this is the internal structure of the 4 hours time frame. This is my internal structure of my medium time frame. And where am I waiting for this structure? I'm waiting for it to come up here. Now, the reason why I selected this zone is you can see it has nice volume before it. The zone has also taken out liquidity above this high, right? It has taken out this liquidity above this high. So now I then go ahead now to select this zone. After I've selected this zone, right, the next thing I can look to do is look at this market here. What do you see? You see this very leg of price, this sell opportunity here, right? It also presenting a buy opportunity here to target this zone before they sell to target the daily zone. So if we happen to look at it critically, you can see that we had a break of structure here. Now, this trade is a trade on Euro GBP. I sent it in the group some time ago, whereby I highlighted this zone for us to buy from. We bought from this zone and the market rallied. I was targeting this zone because I knew that okay, this would be the zone that I'll finally be aligning myself with the 4 hour structure to sell, because though this one is in the direction of the initial trend on the daily time frame, which is bullish, but it doesn't really make sense according to the narrative of the daily time frame. It doesn't make sense according to the narrative of the daily time frame. So what you want to see is it should actually align with the narrative of the daily time frame. So now, right, after after this break of structure here, we can still see that the market still struggled to push up. It left us another zone. This is another break of structure. Now, all of these are internal structures. So from here, we can still see that this market might likely up provide us with another opportunity right down here, because this is our next break of structure. So we likely want this market to push down a little more, give us tap into this zone and give us a fractal confirmation for us to buy. Then we can target that zone, which will look for another fractal confirmation to sell, and finally take off this liquidity that is resting down here. We finally clear off this liquidity that is resting down here. So this is the opportunity. First of all, the first opportunity you are going to be looking for is taking a buy. You buy here, you target this zone, right? Once the market reaches here, you need to wait for the market to show you that, okay, I'm like this, I'm looking to continue with this counter trend move. Once the market continues with this counter trend move, you are going to then you look for confirmation and you can join in the move. Now, right, let's say you did not go down into all this, you did not go down to into the smallest time frame, you did not do top down analysis, you just went into your chart and did analysis without considering all of these factors. What will you be missing? The first thing you are going to be missing is, first of all, let's go down to the 1 hour time frame and study this move here. We are in the 1 hour time frame here. If you zoom out here, let's adjust this thing, let's refine it, right? If you came down to if you came down to this time frame and did all your analysis on this time frame without considering what is in the other time frames, there's one problem which you are going to run into in the future. Once the market reaches this zone, right, you will never know that the market has reached any zone. You will keep seeing that, okay, this market has pulled down here, it has created another break of structure, right? Because this is approximately where the next break of structure should be. If the market pulls down here like this, goes up, creates another break of structure, then once the market is pushing down, right, you are seriously looking here to still buy. You are correct, but this top-down analysis shows that you are wrong. In a top-down perspective, you will be wrong because when you buy from here now, this market will not. It will just give you a small reaction and push down. You think that the trend has changed, but once that you think that the trend has changed, it pushes down a little bit, mitigate the daily demand zone here, it mitigates the daily demand zone below, which we are looking at, right? It mitigates that daily demand zone and it's coming back up here. You're looking to sell, even if you have inducement and you have marked their structure correctly, you're looking to sell and the market just goes ahead. So it's not just about inducement that traps you in a market, right? We have top-down analysis will also trap you in a market if you don't look at the market from a top-down analysis perspective. Sometimes, right, you enter the market, you look at the break of structure, you look at it, it doesn't make any sense. It doesn't the problem that the reason why that thing is not making sense is not because the break of structure is not defined in your strategy. It's because you have not looked at the market from a top-down analysis perspective. You think that maybe the market just decided to change characters here, then change back characters. It happens a lot to many people, and you think maybe looking at it, you think that, oh, this market is just changing characters. So where should I think that I will actually buy and make profit? It's because you are not understanding the narrative of the market. Before you take a trade on a smaller time frame, you need to first look at the market and try to understand the narrative of that market so that you understand where the market is going to. So looking at this here, the trade I gave you guys here in the group last time, though it was not just about this break of structure. We had a demand zone here. We also had a change of characters up here, showing that the market is a in a pullback phase. It's in this pullback phase. So let me see. Okay, so you guys have seen the secret of market analysis and you have also seen the zone we are looking at for this pair. Now let's go over to, I think it should be Euro AUD, the trade I gave last week, which was also heading to another POI. All right. No, it should be Euro CAD. Okay. So the trade I gave you guys last week, it was focused on a zone that occurred inside here. Now, there were some criteria to this trade that I gave you. Please let me just check if the connection is going. Because once I leave Telegram like that. Okay, everything seems to be okay. Everything seems to be fine. Now, the trade I gave you was concentrated on this zone. You might see that this is a lot of chubby price action, but in a grand schemes of things, right? This is not that so. This is nothing. As I was saying, this might look chubby here, but when you start to look at the market, you understand this is not really that chubby. Now, if I go up to the bigger time frame, the initial thing I'm going to say is, first of all, there's one thing we are going to see, right? We have our range on a bigger time frame. This is our range from this high to this zone to this high here. Now, this is where I'm concentrating on. Now, I also look at this break of structure here on a bigger time frame. I don't really need to take my time and check into other things, but I can probably mark out this structure if you want. So here in this zone here, right, I've already identified that this market is bullish. And the first thing I'm looking for is maybe this market has started to pull down to the downside, maybe to mitigate something and then rally up. First of all, here we have this very visible demand zone. We have this visible demand zone here. Now we have already identified that, right? If we go down now to our medium time frame, first of all, what we are going to see here is this market, right? This market has swept this whole high here. It has swept this whole high here. Now, this at the time of me sending that trade, I had this possible swept here, and the market was still somewhere around here. Now, when I drop down to my smaller time frame, I also identified this zone here. This was a potential zone that the market might also react from and buy. So I did the analysis. It was someone around the 30 minutes time frame. So if I drop down to the smaller time frame, which was my 30 minutes time frame, right? First of all, what did I see before sending that trade in a group? I saw this market had been pushing up here. This was a break of structure to the upside. Now, this break of structure might look very insignificant to you, but it's actually significant. This was a break of structure to the upside in this internal structure here. Now, after that break of structure, it was followed by a change of character immediately here. So now I've already identified my zones, right? I've identified a possible buy zone here, and I've already identified that this market has swept liquidity here. So when this market is once this market has given us this change of characters, what I'm initially looking for is for a sell. Why am I looking for a sell here, right? You can see on a daily time frame, we have this move like this. The market has broken structure. The market has swept liquidity, and after sweeping liquidity, it has started to trend downward. So after that, I did mark out my zone, my inducement, and I mapped out this supply candle. This was a trade we had zero drawdown on the other day in a group. Now, right, also understanding being me, I also understood that this market will not just sell straightforward. This market will not just sell straightforward because we have this demand zone here. So what I did was I entered here, putting my stop loss above here and targeting the middle. I targeted just this where this imbalance of this demand zone got completed. And as you can see, the trade I sent in the group hit TP. If you go back to the channel on Telegram, you're going to see this trade on Eurocard. Now, also, when the market came down to this zone, I saw this reaction, I saw this big rejection. I also saw this market starting to push to the upside by creating this break of structure to the upside here, and we had a sweep here. Now, what I initially did was I entered a trade. I identified a demand zone here and took a trade here, and I was targeting for the market to continue and break structure to the upside. After the market played around 1:2, it eventually came back uh, at midnight to hit me out. This move like this happened at midnight and the market hit me out. So basically, right, if I was smart enough or if I was on chart when this move happened, I should have gotten my trade here and targeted the zone above here. But sometimes things like this will happen. Things like this will happen. And you need to understand that it's not every trade that you lose because of the entry or because you did not get the narrative right. But first of all, you need to understand that when while you are trading, you need to have the narrative. A bigger time frame tells you the narrative. Yeah, yeah. Your medium time frame, it tells you the entries, and it gives you the directions and your points of entries. Your smaller time frame will give you when it will tell you when to enter to minimize losses and to maximize your profit. So are we together? Now, after talking about this, right, let's talk about risk management. The other day in the group, I mentioned that, please let me give me a moment, let me check. I need to constantly be coming down back to Telegram to see if it's working. Please, your questions will be entertained at the end of the class. So, all of this doesn't make sense to you if you don't have the appropriate risk management plan. So, I know majority of you guys in the Telegram channel, you are supposed to already be profitable. With or without my signals, you are already profitable. The only thing you don't understand how to manage properly is your risk management, and that is what is holding you back. Now, majority of that is, I will not blame it on you all. It's due to the country, or let me say the geographical location in which you were born, right? It has because of the lack of huge capital for some of us, we have been programmed in a way that will deposit money and will not see, will want to see big results, or not really wanting to see big results. But if you want to manage risks, the small capital that will allow, or that will want to use, will not be enough. The profits from that that proper risk management will not allow you to live a comfortable life. So that is why you keep trying to go above what you are supposed to risk. So first of all, I talked about a 1:3 before in the group. Now this 1:3, once you are able to achieve 1:3 in your trading, you only need about 30% win rate. Now this 30% win rate, right? For every trade you risk $1, you are making $3. For every trade you risk $1, you are making $3. This is what this 1:3 means. So it means that if you take 100 trades, you win 30. If you take 100 trades, you win 30 trades, right? That will be equals to $3 times 30 times 3, which will be equal to $90. Now, inside this $90, right? You know that you have only won about 30 trades inside 100 trades that you have taken. You only won about 30. Now, how many have you lost? You lost 70, right? If you take 30 minus 100, you whether it's anyhow, just you get the concept of minusing. So now you see that you'll be left with 70. Now, in this 70, right, you risk $1 per trade. Remember, this one you risk $1, you won 30. That means you won a 1:3. But this one now you risk only $1. So now you see that inside 100 you have lost 70 trades. So you take this 70 times one, right? You see that this will give you $70. You take this 90 now, you minus 70 from it. You see that you'll be left with You'll be left with 20. So though you took 100 trades and though you lost 70 of the trades, you won only 30 of those trades. If you stick to a risk to reward ratio of 1:3, you are going to end up with $20. Now, right, I know this $20 might not look much to you. Now, imagine taking this same principle and applying it on a bigger account. Take this same principle, you apply it on a bigger account, and you will be able to see how much. Please just give me a moment. I have a call coming in. Now, look at this, right? Imagine you took this and you applied it on a bigger account. This $20 may become $200. It depends on the account size you applied on, or $2,000, or $20,000, or even $200,000, depending on the capital you have at hand. And I know for you approaching or achieving 1:3, right? Inside 100 trades, for you achieving 1:3, a 30% win rate is very easy. For majority of you, it will be very easy. If your strategy doesn't at least get 1:30, get a 30% win rate, then you need to work on it seriously. You need to work on yourself seriously, because this is all you need to be profitable. All you need now is the capital. Now, there's one factor that we have not talked about when it comes to these calculations, right? It's not a lot sizes, it's how much you risk per trade. If you say you want to risk $1 per trade, right, you need to make sure that if you are entering a trade that has 10 pips stop loss, you adjust your lot size in a way that if you lost that trade, you risk only $1. You lost only $1. If you are entering a trade that has 0.5, you adjust your lot size in a way that if you lose that trade, you are losing only $1. So you need to keep your losing amount constant. Not your lot size, it's your it's your losing amounts that matter, not your lot sizes. Don't cut corners when placing your stop loss. Calculate your lot size to 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 achieve you the $1 that you are comfortable risking. Now, this is something that I've not shown majority of the people, neither on YouTube or TikTok. On my channels, I've not shown majority of you guys here. This trading is a mental game. It's a mental game. You are last if you are smart, you are patient, and you are if you are comfortable with your $20. If you are comfortable with your $20, then you can use your $100 to do that. But now this 30% win rate, some people will also have higher, maybe 40%. Now, if you start having 40%, this amount starts going up. But we did this on this base to actually make sure that even somebody that has been trading for barely 2 years, right? If you keep your psychology intact, you'll be able to make money in the market. Trading will be very boring, but you will not lose money. So, do you prefer to be excited and lose money, or to be for it to be boring and you make money? So, it's now up to you. If you have your willpower, those that have their willpower from this class will eventually see the market in a different limelight and start making money. But if you have a problem, then you keep blowing accounts. Stop flipping. You you can flip. I for once I flip, but I have my different accounts that I take them seriously. You cannot see me take an account of $5,000 and I'm doing all of this type of rubbish that I'm doing in smaller accounts with them. That will not be possible, and that is not wise. So I think that will be all for today. I will want to go into questions for those that have things to ask. For those that have things to ask, you raise your hand. Then, after I'm done wiping all of this, you can. I give you a chance. You ask your question, and then we'll be done. This thing is okay. So the first, who is the first person on our list? Please raise your hand up if you wish to speak. Then I will enable the mic for you to ask your question, and then we can we answer it. Hello, anybody wish to ask a question? I saw people raising hands before. So are you willing to ask a question, or I should end the class?
Yes, I have a question.
Yes, please, you can go on.
Yeah, it's about the time frames. I had you talk of the medium time frame and this other time frame you use. What is your medium time frame
I use
specifically?
I use 4 hours time frame as my medium time frame. Sometimes I use the 1 hours time frame. It depends on how long I want to hold the trade for. The main
Okay.
idea for it is for you to do top down analysis, because when once you don't do top down analysis, you get too invested in a one time frame, and once the market violates that time frame, you will not know what happened to you. So, well, meanwhile, if you had done your top down analysis, you should have seen majority of the things in the bigger time frame. So
Okay, and is it advisable to take these other trades like on the